Bitcoin against stocks. Which one is the better investment? This is a debate that almost every investor has thought about at some point. Stocks have been around for centuries and built the modern financial system we live in. But Bitcoin is the revolutionary new asset that could reshape money itself. So should you put your hard-earned money into Bitcoin, or are you better off sticking with stocks? Let's break it down in detail. First, let's quickly define what stocks actually are. When you buy a stock, you're buying a small piece of ownership in a company. That could be Apple, Tesla, Microsoft, Amazon, thousands of companies listed on exchanges around the world. The value of your stock depends on the performance of that company, its profits, its innovation, its management, and how investors perceive its future. Stocks are backed by real-world businesses. These companies generate revenue, pay employees, produce goods or services, and sometimes pay dividends to shareholders. Over the long run, the stock market tends to grow because the human productivity grows. The US stock market, for example, has returned about 8 to 10% annually over the past century, adjusting for inflation. Now, Bitcoin is completely different. Bitcoin is not a company, it doesn't have profits, it doesn't have employees, and it doesn't generate dividends. Instead, it's a decentralized digital currency with a fixed supply of 21 million coins. The value of Bitcoin doesn't come from earnings, it comes from scarcity, security, and adoption. Bitcoin is like digital gold, it's hard money that no government can print more of. It's global, censorship resistant, and runs on a network secured by miners around the world. So while stocks represent ownership in businesses, Bitcoin represents ownership in a new type of money, one that is designed to be scarce, neutral, and resistant to inflation. One of the biggest differences between Bitcoin and stocks is volatility. Stocks can be volatile, but Bitcoin takes volatility to another level. A stock might fall 20% in a bad year. Bitcoin, on the other hand, has dropped 80% multiple times in its short history. But that volatility cuts both ways. Stocks might rise 30% in a great year, but Bitcoin has gone up thousands of percent in a single cycle. Investors who bought in early and held through the chaos were massively rewarded. So if you're risk averse and want a smoother ride, stocks are generally more predictable. If you're willing to stomach extreme volatility for the chance of outsized returns, Bitcoin offers that. Here's an interesting point. Over the last decade, Bitcoin has been the best performing asset in the world. It has outperformed every major stock index, every commodity, and even tech giants like Apple and Amazon. But stocks have the advantage of time. They've proven themselves for over a century through wars, recessions, inflation, and technological change. Bitcoin is only about 15 years old. We can't know with certainty how it will perform over the next 50 years. So while Bitcoin has the potential for massive growth, stocks have the history and reliability to back them up. Another major difference is how each one handles inflation. Stocks are often seen as a hedge against inflation because companies can raise prices and generate higher revenues when costs go up. But stocks are still denominated in fiat money, currencies that central banks can print endlessly. Bitcoin, on the other hand, was created as a direct response to inflation and money printing. Its supply is fixed, only 21 million will ever exist, and the new supply gets cut in half every 4 years in an event called the halving. For people worried about the long-term value of their money, Bitcoin is appealing because it's one of the hardest assets in existence. Stocks are fairly easy to invest in if you live in a developed country. You can open a brokerage account, buy a share of your favorite company, and hold it. But in many parts of the world, access to stock markets isn't that simple. Bitcoin is different. Anyone with an internet connection can buy Bitcoin, store it in their own wallet, and truly own it without relying on a bank or a broker. That accessibility makes Bitcoin more universal, especially for people in countries with weak financial systems or unstable currencies. One advantage stocks have is dividends. Certain companies like Coca-Cola or Johnson & Johnson pay out part of their profits to shareholders every quarter. This creates a steady stream of income for investors, even if the stock price isn't skyrocketing. Bitcoin doesn't pay dividends. The only way to make money with Bitcoin is for the price to go up, unless you take on additional risks by lending it out or using it in DeFi. So if you're someone who values income and cash flow, stocks are better for that. Bitcoin is more of a pure capital appreciation play. So why would someone choose Bitcoin over stocks? The main reasons are scarcity and hard money. Bitcoin is capped at 21 million, unlike fiat or even stocks which can be diluted. Potential for massive upside. If Bitcoin continues to grow as digital gold or even as a global currency, it could be worth multiples of today's price. Independence from traditional systems. Owning Bitcoin means you don't have to rely on Wall Street, brokers, or even bankers. You control it directly. And why would someone choose stocks over Bitcoin? Some key reasons are proven track record, stocks have created wealth for generations, cash flow and dividends, you can earn passive income with certain companies, a lower volatility, stocks are more stable and predictable compared to Bitcoin, and diversification. With thousands of companies, you can spread your risk across sectors and industries. So which is better? The truth is, it's not about choosing one over the other. Bitcoin and stocks serve different purposes. Stocks are a way to grow wealth steadily by investing in human innovation and businesses. Bitcoin is a way to protect your health and potentially multiply it if adoption continues to grow. In my opinion, you need to balance both depending on your life situation, age, income, and everything in between. But I do think that having at least a small percentage of your wealth in Bitcoin is a no-brainer for anyone. Of course, none of what I'm saying is financial advice, it's all just my opinion. If you enjoyed this video, make sure to like the video and subscribe to the channel to not miss any future videos about Bitcoin. Thank you for watching and I'ma see you in the next one.